There's currently a lot of uncertainty in the real estate market here nationally, whether it's headlines in national or local news saying that prices are falling, buyers are uncertain and are holding back from entering the market, or the market overall is just slowing down. There's certainly a number of things going on that are causing some sort of hesitancy with buyers in this market. And in general, the real estate market is a bit different even now than it was a few months ago. Whether that's uncertainty with how tariffs are going to affect our economy, just the economy as a whole in general, or the uncertainty with which direction mortgage rates are going to go and if and when they're going to drop. There are a number of things factoring into buyers' decisions to either enter the market or not and sit back and wait. But in this video, what I want to do is I want to look past the headlines and I want to dive right into the data. I want to show you what's been going on over the last 5 years, over the last 12 months, and get an idea of what we might be able to expect moving forward. Headlines are great and articles are great, but I want to give you the data directly. So if you're somebody that's a numbers nerd and wants to look into the numbers yourself and see exactly what's happening in multiple different aspects of our real estate market, I'm going to show you everything right now. So stay with me. As always, I'm Bryce Greenleaf, local realtor here in the greater Seattle area. Love it when you guys reach out to me here from YouTube when you're looking to buy or sell a home in the area. As always, happy to help out. But let's just jump right into the numbers, like I said. All right, so let's first start by looking at the inventory numbers that we're seeing here in the greater Seattle area. So for this, we're going to look at King County for all of these different metrics. So let's start with the active listings here. Now, right off the bat, you can see one of the biggest changes that we have currently seen in our market. You've got 2025 active listings up here all the way in the 4,000 range in terms of the number of active listings in King County in May of 2025. Now you compare that to last year, 2024, it was around 2,600. So a huge change going from about 2,600 to about 4,000 in active listings. Now, what does that mean? Of course, that means a lot more opportunity for buyers, more opportunity up here than we've seen over the last 5 years. I mean, our overall inventories numbers over the last 5 years have been very, very low. And so it's caused a lot of issues for buyers entering the market to have a struggle being able to find something that they really are happy with and have a number of options. Now, the last 5 years have been a little bit different market than what we've seen really historically pre-COVID. So this number is starting to get back up to where we would have expected prior to 2020 and those COVID changes. Now, if we continue to move down and we look at the new listings. So if we want to figure out, okay, is this because there's a bunch of new inventory coming on the market, or is this because things are just staying on the market for longer? New inventory, new listings number is going to help give us some context there. So you can see the amount of new listings, yes, is a bit higher. So up here in 2025, we are at just over 3,700 in new listings there this May of this year. Compare that to May of last year, we were just at about 3,200. So we have certainly had an increase in new inventory hitting the market. I think a lot of this is almost that pent up inventory where so many people were waiting that have a 3 or 4% rate on their house and they wanted to move or maybe even needed to move, but they're like, hey, I want to wait until rates come down. And that was their thought process over the last 2 years. Hey, I'm going to wait until rates come down and then I'm going to sell. Now, 2 years later, rates still haven't come down much. We're still hovering around that 7%. And so a lot of those people are at the point where, hey, I've got to make a move now. I can't continue to wait. I don't know what's going to happen with rates. I just need to do this now instead of waiting longer. And so I think that's some of that's coming out into play this year, this spring, is some of that pent up inventory. But if we look at the comparison of new listings to active listings, like we saw up here, this huge jump, we don't have nearly as big of a jump here. So I think that's a very good indication that we're seeing inventory hitting the market and staying on the market for a bit longer than normal, increasing that total inventory number. So overall, houses are certainly sitting a bit longer. So again, that's decent news for buyers that have been waiting for a market that's a little bit more friendly to them. If we look at those pending sales to see, okay, what's the activity like when the homes are on the market? and we think, okay, homes are sitting for longer. It's not just new listings, a bunch of new inventory. It's just that inventory is sitting for longer. This number also kind of proves that point here. Pending listings over the last 5 years. So 2021, of course, the market was absolutely bonkers, absolutely insane. But as we move down to 2025 here, it's hard to actually get a read on this number because they've all ended at the same point, but it's right around 2,100 pending listings in King County for 2025. 2023 and 2024 were nearly identical. So we've had about the same number of pending sales, though we've had more listings. So it's increased the amount of inventory again that has been sitting on the market. If we go look over at the pending listings chart over here, year over year, month by month look here in 2025, you can see a little bit of fluctuation. Here year over year, like I said, 2025 to 2024 in May, it's been pretty stagnant, right around 2,100. We've had a couple different changes over the last few months, but not massive changes in either direction. It's been stayed relatively consistent over the last year. If we look down at closed sales to see, what indication pending sales are showing us here, closed sales are going to show a very similar story, of course. 24, 25, and 23 all grouped together there at about the same point. We are right around 6,500 plus or minus based on the year. Right now, of course, you can look over on this chart. We're just under 6,500. So we are, in terms of these closed sales, a bit lower than we were last May. And, year over the last few months has been pretty similar. Very little change from the previous year. Now let's take a look at months of inventory. Of course, we just said, hey, if the inventories are what they're showing, that homes are really staying on the market for a bit longer. And this number is showing us that. So months of inventory is showing us the amount of homes, how long it would take to sell out of the current inventory if no new inventory hit the market. So it shows about how quick the market is moving. So the market here, of course, is moving a bit slower in 2025. We're at 2.5 months of inventory. Now, what they say is a balanced market is 4 to 6 months of inventory. Now, that's a lot. So we've been nowhere near balanced over the last 5 years, but we're certainly moving in a direction that's a little bit more favorable to buyers than, again, we've seen in the last 5 years, because these numbers down here are all very, very heavy sellers markets where homes just are not sitting on the market for very long at all. Now, we look at all this and we think, okay, maybe prices are really dropping. I mean, inventory is way up, pending sales aren't going up. Maybe prices are finally starting to drop here in Seattle. Let's take a look at the median price numbers. Not really the case. Prices, for the most part, are staying quite stagnant. Now, of course, we are, up from 2021. Let's get the selector here. So 2025 and 2023, let's take a look at this chart. It's a little bit easier because they're all grouped together. So for this year, we are at about 989,000 here in May of 2025. It's actually down just from about a million May of last year. Very little change there, more of just a kind of a stagnant period over the last 12 months for those median home prices for residential homes in King County. This year, over the last few months, month over month, we have seen either completely stagnant or a little bit of an increase from the year previous. So we're not seeing huge growth in home prices. We're also not seeing drops for the most part in home prices. Now, this could certainly be indicative of the seasonal change. When you look at the 2025 number here, we were at 1,030,000 in April, and then it came down to about 989. And so that is typical for a seasonal slowdown. As we get into the summer months, then move into fall, we are going to have that seasonal slowdown for those numbers. So I don't think necessarily this is an indication of prices are going to start dropping. We'll talk about that in a minute, why I don't think there's going to be any significant drop in prices and why I think we're going to see a bit of a stagnant market, looking a little bit similar to what we've seen over the last couple of months until we see some sort of change in interest rates. But we'll talk about that here in a second. One other stat that's really important to look at when we're talking about these median sales prices and what's happening in the middle of a transaction and with offer situations, let's look at the pending data reports. So here on the pending data reports, it shows us what's actually happening within a transaction currently, the offer situation, and all of that. So let's look at King County here. And let's go the past year. Let's refresh. All right, so the unpublished pending price, what's happening with these home sales and the prices, it's up 7% over the last 12 months. That pending price is higher than what we've seen in May of 2024. The pending price is, again, when we look at, hey, our prices dropping, are people getting huge discounts on homes? Certainly there's options, there's scenarios where we're getting under list price on homes for clients, but on average, sellers are still getting 100% of their listing price on that sales price. Now it's down from 101% last year, but you're still in a healthy territory for those sellers. Now, when we look at this, is a great stat, I think, to look at, especially with buyers that are getting active in the market and are really trying to get an idea of what to expect, is what's actually happening with these offer situations. Are homes getting bidding wars? Are they going into escalations? So here is a stat that shows the number of homes that are getting multiple offers, more than one offer on that home. Yes, we have dropped from last year from 36 to 27%, but there's 27% of homes that are still getting multiple offers. We are still seeing some situations where homes are being bid up well over listing price for some of the cream of the crop homes. So all of this to say, like, we've looked at the inventory numbers, we've looked at the price numbers that aren't like jumping, significantly. There's still cases out there where there is competition, there is price increases, and you may have a bit more of, you might have to think a bit more going into that one. You might be bidding against another buyer. Now we look at escalation addendums there, which shows, people that are willing to escalate above the listing price. It has dropped as well. It's down 6%, but 12% of the homes right now have escalation addendums. Now that's a pretty significant drop, especially from not just from last year, but from where we saw 2021, 2022, where it was probably 50+% at least of homes getting escalation addendums. That is certainly not the case anymore. So a lot more opportunities for buyers. Buyers that are going under contract with financing addendums, protections for getting their mortgage approved, 64%. So that's up, showing that buyers are able to have a little bit more leverage now and get the protections in the contract that they want. Same thing can be said with the inspection addendum. It's actually stayed pretty level here. One thing I will say about this is a lot of sellers are providing inspections up front. So you might be seeing this and thinking, oh man, only 34% of buyers are getting inspections on the house. That's not the case. A lot of times those are done before going under contract, and then the addendum is not in the contract. So this stat is a little misleading there, but it is still a good thing to see. Now, lastly, let's take a look at the mortgage rates. So we've stayed pretty stagnant over the last, about a year. There hasn't been a ton of change. That 30-year fixed rate right now is just under 7%, and that's where we've been. We've been hovering in the high sixes to low sevens, so we've not seen major changes in any of those rates, any of the mortgage rates. And so, again, a lot of people have been sitting on the sideline waiting for rates to drop, realizing, hey, they haven't been dropping. We need to enter the market now, and be able to do something and move on. And that's why sometimes you see a little bit more of that inventory number climbing a little bit on those new listings, like I mentioned. All right. Well, hopefully that breakdown was helpful for you. Now, if we talk about what we think is going to continue to happen moving forward, our price is going to significantly come down. One thing that I always talk about my clients and advise them on, and try to give a bit of context and understanding. Here in the Seattle area, we're a bit more insulated than maybe some other markets from major changes in prices. The reason for that is simple supply and demand. It's the inventory numbers and the demand numbers. So if we look at the inventory numbers, we don't have massive amounts of new construction here in the Seattle area. There's not a bunch of land that's buildable and available. Yes, you do have a number of new construction townhomes happening in Seattle proper, but when you get outside of that market, outside of the townhome market in Seattle, there's not a ton of new construction for single family residential homes. There's just not the land available. So our inventory numbers are never going to climb to a drastic number. If we look at those demand numbers, Yes, the hirings may have slowed down. Microsoft has had layoffs recently. We still are one of the top job markets in the entire country. We're one of the leading AI job markets, tech in general. I mean, we have all the big tech companies here. I work with a lot of relocation clients that, again, contact me here from YouTube when they're moving over here. A lot of those people are tech workers that are still taking jobs over here in 2025 and 2024. And so there is still hiring happening. There is still people moving over here for those tech jobs and other job industries as well. It's not just tech. And so I think when we look at that supply and demand, we're not going to have a massive gap between the two anytime in the near future, in my opinion, especially compared to other markets in the US that might not have those aspects in their market with the super strong job market and the really lack of new construction homes that can be built. So I think that's one really important thing to look at when you're evaluating how we're going to move going forward and what the market's going to look like. We just break it down into the simplistic terms of supply and demand. I think that is going to be a big factor in really just keeping us steady. I think our market is probably just going to stay steady for a little bit. Yes, we'll likely see a little bit of the seasonal slowdown, which we see every single year as we move into the summer and fall months. I don't see any major drop in prices. And then if those rates do end up coming down, who knows if they're actually going to come down this year? It might be next year. But when those rates do come down, you would expect more buyers to start entering the market again, more confidence in those buyers that will want to enter, and then the prices starting to go back up. So that's my general opinion of my translation of some of these numbers, what we've seen, and what we might be able to expect moving forward. Now, like I said, if you're somebody that's looking to buy or sell a home here in the greater Seattle area, always love helping out. Feel free to reach out to me at my info below. Thanks for watching this one. And if you want some more specific info on maybe a different county, Snohomish or Pierce, or specific city info on some of these stats, feel free to reach out to me. I'd be more than happy to share that with you if that's something that would be of value. Thanks for watching this one.